Hey everyone, this is SEA Crypto Daily Buzz. Today is Sunday, March 15th, 2026, and this channel brings you the most important crypto news for investors across Southeast Asia. We've packed 6 major stories for you today, so let's jump right in. A potential mega deal is taking shape in the exchange world. According to crypto journalist Wu Blockchain, Coinbase is in active discussions to acquire a minority equity stake in Bybit, one of the largest offshore crypto exchanges globally. The deal is not a full acquisition. Instead, Coinbase would invest in Bybit to help the platform build a compliant pathway into the heavily regulated United States market. Sources suggest the deal would value Bybit at approximately $25 billion, putting it on par with OKX after its recent backing from the parent company of the New York Stock Exchange. Neither Coinbase nor Bybit has officially confirmed the negotiations. My take on this? This deal would be a landmark moment for the crypto exchange industry. Coinbase gets access to Bybit's massive offshore derivatives volume, while Bybit gets a compliant bridge into the US, the most lucrative but hardest market to crack. For Southeast Asian investors, this matters because Bybit has a huge user base across the region, especially in Vietnam, Indonesia, and the Philippines. If this goes through, expect tighter compliance standards on Bybit, which is ultimately a positive for user protection. But keep in mind, a $25 billion valuation also signals that major exchanges are now being valued like traditional financial infrastructure companies, not just tech startups. Circle's USDC stablecoin is approaching a historic milestone. Its market capitalization is now closing in on $80 billion, driven by a significant surge in demand from the Middle East. Analysts point to capital outflows from the UAE and Dubai as a major factor, as real estate values in the region have dropped roughly 27% amid ongoing geopolitical uncertainty. Investors appear to be converting local assets into dollar-denominated stablecoins as a safe haven move. USDC's growth also reflects broader institutional adoption, with the stablecoin increasingly being used for cross-border settlement, remittances, and treasury management. My personal read on this: when capital flees a region and flows into USDC rather than traditional bank accounts, it tells you something fundamental about how money moves in 2026. Stablecoins are no longer just a crypto trading tool. They are becoming the default rails for international capital movement. For investors across Southeast Asia, particularly in the Philippines and Vietnam, where OFW remittances are critical, this trend is directly relevant. As USDC liquidity deepens, it creates more efficient channels for cross-border payments that bypass the slow, expensive traditional banking system. Former UK Prime Minister Boris Johnson made headlines this week by publicly calling Bitcoin a giant Ponzi scheme. He argued that Bitcoin lacks intrinsic value and has no issuing authority, making it fundamentally unreliable as a store of wealth. The comments drew an immediate and sharp response from Michael Saylor, the executive chairman of Strategy, who pushed back on social media. Saylor pointed out that a Ponzi scheme requires a central operator. The exchange quickly went viral across crypto and mainstream media. My honest assessment: this debate is not new, but it matters because of who is saying it. A former prime minister of a G7 nation calling Bitcoin a Ponzi carries weight with mainstream audiences. However, Saylor's rebuttal is technically accurate. Bitcoin has no central operator, no promise of returns, and its entire transaction history is publicly verifiable. For Southeast Asian investors, the practical takeaway is this: whenever a high-profile figure makes extreme claims in either direction, treat it as noise. Focus on fundamentals, network activity, ETF inflows, regulatory progress, not on political soundbites. We still have 3 more important stories to cover. Let's continue. Alright, let's move on to the next 3 stories. The U.S. Internal Revenue Service has officially rolled out its new Form 1099-DA, marking the most significant expansion of cryptocurrency tax reporting in American history. Starting with the 2025 tax year, all digital asset brokers, including centralized exchanges like Coinbase, Kraken, and Gemini, must report gross proceeds from every crypto sale and exchange directly to the IRS. Beginning in 2026, brokers will also be required to report cost basis, acquisition dates, and whether gains are short-term or long-term. One of the most challenging new requirements is a wallet-by-wallet cost basis rule, which means each broker account must track cost basis separately. Transfers between wallets no longer automatically carry over cost basis information. My take on this? Even though this is a US regulation, it has global implications. Many investors in Southeast Asia use American-based exchanges or hold assets that eventually flow through U.S. platforms. The wallet-by-wallet tracking rule is going to create serious headaches for anyone who moves crypto between multiple exchanges and personal wallets. If you trade on Coinbase, Kraken, or any platform that serves U.S. customers, expect to receive these forms and be prepared for more detailed record-keeping. This is the IRS moving toward full transparency in crypto. The era of underreporting is effectively over. Thailand just took a major step in stablecoin adoption. BitCub Exchange, one of the largest crypto platforms in the country, has partnered with Ripple to become the first Thai exchange to list RLUSD against the Thai baht. RLUSD is Ripple's enterprise-grade stablecoin, fully backed one-to-one by US dollar deposits and treasury securities. The listing opens direct fiat to stablecoin trading for Thai users, eliminating the need to go through intermediate dollar conversions. BitCub is also launching educational campaigns through BitCub Academy to help users understand stablecoin mechanics and safe usage practices. My personal read on this. This is a significant development for Southeast Asian crypto infrastructure. Thailand is positioning itself as a regional hub for regulated digital assets, and a direct RLUSD baht pair makes cross-border payments dramatically simpler for Thai businesses and individual users. For investors across the region, this sets a template that exchanges in the Philippines, Indonesia, and Vietnam could follow. Stablecoin to local currency pairs reduce friction, lower costs, and bring crypto one step closer to practical everyday use. Watch for similar listings on other Southeast Asian exchanges in the coming months. Coinbase CEO Brian Armstrong made a bold prediction this week, agreeing with legendary investor Stanley Druckenmiller that stablecoins are on track to become the dominant form of global payments within the next 10 to 15 years. Armstrong argued that the speed and cost advantages of blockchain-based payment rails will eventually make traditional wire transfers and correspondent banking obsolete for most cross-border transactions. He emphasized that regulated stablecoins backed by real reserves are not speculative. They are infrastructure that solves a real-world problem of slow, expensive international money movement. My honest assessment? When the CEO of the largest U.S. exchange and one of the most respected macro investors in the world both agree on a trend, it is worth paying attention. For Southeast Asian economies where remittances represent a significant percentage of GDP, the Philippines alone receives over $30 billion annually, stablecoin payment rails could fundamentally reshape how money enters the region. The combination of today's BitCub RLUSD listing and Armstrong's comments paints a clear picture. Stablecoins are moving from crypto-native use cases into mainstream financial infrastructure. The transition is not a question of if, but when. Before we wrap up, here's a quick recap of today's 6 stories. Story 1. Coinbase is in talks for a strategic equity stake in Bybit at a $25 billion valuation. Story 2. USDC market cap nears a record $80 billion, driven by UAE capital outflows. Story 3. Boris Johnson calls Bitcoin a Ponzi scheme, and Michael Saylor fires back. Story 4. The IRS launches Form 1099-DA, the most comprehensive crypto tax reporting system ever. Story 5. BitCub becomes the first Thai exchange to list Ripple's RLUSD stablecoin against the baht. Story 6. Coinbase CEO predicts stablecoins will dominate global payments within 15 years. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please consider subscribing, liking, and turning on the notification bell. For real-time alerts and trading insights, check the description. See you in the next one.